The stock market is at the very brink of something huge, and the fact is that there's many patterns arising that are showing that we're in for an unpleasant awakening. We're seeing patterns similar to that of the Great Depression, the dot-com bubble, and the Great Financial Crisis. Before each of those was a huge run-up, and over the past 2 years, the stock market has been charging straight up, propped up by inflation, AI hype, propaganda, and political motives. This video is going to teach you how to invest in an ever-changing and very volatile stock market that we're about to see over the next year or so, with a method that many millionaires have been using for quite some time, and it's a method that I've coined ABBAA. So I'm going to explain what that is, how you can do it, and how we can benefit and profit from this stock market that's going to be a little bit crazy over the next year. My name is Nolan Govea, my students call me Professor G, and I made this channel to make investing simplified. We've seen so many crashes in the past 100+ years with the stock market. So many wars, crises, outbreaks, financial meltdowns, and recessions have led to huge drops in the market. From 1921 to 1929, the Dow had grown to 6 times its pre-1921 high. The bubble finally burst in October of 1929. After industrial production peaked that summer, stocks began a steady decline. By October 23rd, the Dow had plummeted 20% from its September highs, triggering a cascade of margin calls as brokers demanded repayment of loans. At the end of the day, October 24th, 1929, known as Black Thursday, the market was at 299.5, a 21% decline. This sparked more panic, and on October 28th, the Dow declined another 13%. On October 19th, 1987, Black Monday remains etched in Wall Street history as the worst trading day ever. The Dow plunged an astonishing 22.6%, wiping out over $500 billion in market value. What made Black Monday so alarming was its seemingly unstoppable cascade effect. Now, unlike 1929, this crash ripped through global markets at unprecedented speed, revealing how interconnected modern markets had become. Now, more recently, during the dot-com bubble at the beginning of the century, the financial crisis in 2008, and in COVID in 2020, the whole stock market dropped like crazy. But let's zoom out. Yes, each one of those crashes was crazy, but when we zoom out to see the whole picture, what happened eventually after each crash? That market came right back and surpassed all-time highs to keep growing strong. The main thing to keep in mind here is that we're actually in a bull market far longer than any type of bear market. This chart here shows that the average bear or down market is usually less than 1 year in total, but definitely not ever more than 3 years. The average bull market is usually 10 years or so. So with that in mind, it's just rarely ever a good idea to keep money out of the stock market. You have a far greater chance of missing out on gains when you hold money out in fear of a drop. Let's play out a scenario with actual numbers from 2022 because that was one of the worst drops that we've seen in recent history in the stock market. Let's say you invested $100,000 at the beginning of 2022. The market had dropped 19.44%. This means your $100,000 would now be $80,560. Not fun. Then in 2023, the market rose 24.23%. So now your $80,560 has grown to $100,079. Last year in 2024, the market rose about 23%. So at the end of the year, your total would now have grown to $123,098. So even in the event of the worst luck ever, where you would have lost almost 20% the very same year that you invested a lump sum, just by keeping the money in the market, it would still be up overall and up over $23,000. Now that's just if you would have kept your money in the market and didn't invest anymore. So you never invested in those lows during that 2022-2023 period. The real power though is in continuing to invest through these market conditions. Because if you would have invested that $100,000 at the beginning of 2022 when the S&P 500 was at 4,667, and then you kept investing money each month thereafter, you would have gotten a cheaper price here, and then a cheaper price here, and then a cheaper price here, and so on all the way through 2022. So yes, your $100,000 went down 20% or so, but since you kept buying in at each level cheaper, as soon as the market started to rise back up in 2023, you weren't just climbing back out of the hole that was dug from the loss of your original investment, you actually started seeing gains of the buys throughout 2022. For example, if you bought in at 3,585, which was the lowest low in 2022, by the end of 2023, the S&P 500 was at 4,769. That would be an increase of about 33% on that buy. And then at the end of 2024, the S&P 500 was at 5,970. So from that buy in 2022 at 3,585, that investment will have grown about 65% in just 2 short years. So while yes, I do agree that it's never fun to look at your account and see that it's cut in half or that you've lost money during a crash, and that definitely hurts. It's definitely an opportunity though, and it's one that makes millionaires each time. The method that I want to introduce to you today is called ABBAA, and it's one that I thought of spurring from the movie Glengarry Glen Ross. In the film, they're told that if they want to up their game and up their sales, it boiled down to one simple thing.
A, B, C. A always B, B, C closing. Always be closing. Always be closing.
ABC, always be closing. Well, for investing, I came up with ABBAA, always be buying appreciating assets. Definitely not as catchy, so I don't expect it to stick. But it's literally that simple if you want to become a successful investor no matter what the stock market throws at you. The thing is that inflation is just going to keep on coming. It'll always eat at the value of the dollar, and lately, inflation has been accelerating. They can't truly stop inflation no matter what the Fed says, so we as investors need to take matters into our own hands. No one's coming to save you. You must do this. You need to buy and invest in assets that are going to appreciate faster than inflation. So what are some appreciating assets that we should be buying over the next 5 years? First is solid ETFs and index funds with low fees. This is why I sound like a broken record with most of my videos explaining that the bulk of your portfolio should definitely be in the 3 ETF portfolio I love so much. Each of those funds has weathered huge storms and has potential to keep growing no matter what's thrown at them. Next would be solid blue chip stocks with a history of good business practice and sustainable competitive advantage. They aren't going to get you rich overnight, but they are going to be a perfect addition to a healthy portfolio and keep that thing sustainable. Blue chip stocks I love are ones like Berkshire Hathaway, Apple, Microsoft, Visa, Procter & Gamble, Johnson & Johnson, Amazon, and Google. Next would be real estate. Physical real estate. Real estate appreciates on average between 4 to 6% per year in price, and some years way more than that. We saw some crazy home price appreciation over the last 4 years, and for any of you that own homes over these last couple of years, you've seen your net worth skyrocket because the equity within those homes has definitely grown. Now that's not typical, but it is definitely typical to have real estate that 10 years ago was much cheaper than it is today. Next would be speculative type assets, but that have shown to hold up quite well to inflation and have at least kept pace with it, if not outpaced inflation. And so that would be things like precious metals like gold and silver, and then also things like Bitcoin. Having a small portion of this in my portfolio has proven to be very smart over the years. Looking at these numbers, it shows that the dollar is worth less and less each year due to inflation, but Bitcoin's value has risen astronomically. No matter what you choose, I hope that you remember ABBA, always be buying appreciating assets. And I'd hope that you do this especially in the next 5 years, because we're gonna see some craziness over this next year, but then I believe that everything is gonna skyrocket due to the inflation and the amount of money or dollars that were pumped into the economy over that last 2020 to 2022 stint. So things are just gonna keep getting more expensive, and the only way to keep pace with that or to outpace that is gonna be to buy the assets that are gonna keep rising with it, which is pretty much what's happened over the last 100 years. Watch this video on exactly what that 3-fund portfolio is and how much as far as percentage you should put in each into your portfolio based on your age, because it actually differs based off of your different life stage. Or watch this video to keep you going strong in your investing journey.